Hi, and welcome to Sanford's sixth Software and Internet Monthly Market Report for 2023. And as usual, we're going to be reviewing the previous month's M&A and venture capital activity across the entire technology landscape. So let's dive in on the M&A front. So in June 2023, there were a couple notable deals that really dominated the landscape. In particular, Silver Lake's $13 billion acquisition of Qualtrics, which was previously owned by SAP, who bought the business back in 2019 for about $8 billion, as well as Blackstone's $4.6 billion acquisition of event tech leader Cvent. As a summary, though, we saw about $18.7 billion in disclosed transaction value, that being mostly driven by those two deals that I mentioned, 98 transactions, and a median revenue multiple of 7.3 times across all of June. So then moving on to yearly deal volume and dollars invested. So 2023 continues to track considerably below 2022 figures, and we could potentially see the lowest deal volume we have over the last 10 years of data we're showing here. Deal volume's tracking to be down about 30%, while dollars invested is down even more at 64%. And obviously, some of the recent interest rate hikes across the US and Canada haven't helped. And we personally don't think we'll see volume correcting for at least another few months or quarters. Then if we look at M&A multiples, the median revenue multiple for Q2 2023 improved slightly relative to last quarter. And just for context, Q2 2023 was sitting at about 4.7x. And we've talked a lot about this previously, and we're still seeing the same trend, I would say, of price compression at the top end of the spectrum. And what I mean by that is much fewer deals are actually getting done at those outsized double-digit ARR multiples that we saw quite a lot of in 2020 and 2021, and even early 2022. And then if we move on to SaaS versus non-SaaS multiples, these have continued to stay tight in 2023 as well as 2022. We saw a much wider spread in prior years where SaaS was, I guess, a little bit hotter. Although my guess is a lot of these non-SaaS businesses that are often under those perpetual license and maintenance and support models, they're a little bit more mature and stable, which investors could be piling into a little bit more in this environment, which has increased those multiples a little bit and made that spread tighter relative to SaaS. And then from an overall volume perspective, we hit a new low in March 2023 with 75 deals. We've talked a little bit about this before, although we've since bounced back, averaging at around 95 deals per month over the last 3 months. And then if we switch gears to the venture capital side of things now, let's take a look at how June 2023 did from an investment perspective. So we saw almost $5 billion of invested capital for the month, a median deal size of 3.5 million, and almost 420 transactions for the month. A big driver of this month's dollars invested was Inflection's 1.3 million raise, which was led by Microsoft. And then if we shift gears to monthly deal volume, we see a similar trend to what we're seeing in M&A. Had a low in March 2023 at about 340 deals, and that's since bounced back over the last 3 months, where we're now averaging about 420 deals per month over the last 3 months. However, again, we keep talking about this, but until the interest rate and macro environment improves, we aren't expecting any dramatic shifts in deal volume, generally speaking. And then moving on to yearly deal volume and dollars invested, 2023, like M&A, continues to track considerably below 2022 figures. And like M&A, we could potentially see the worst deal volume we have, or excuse me, the lowest deal volume we have over the last 10 years of data that we have in front of us. Deal volume's tracking down about 27%, while dollars invested is down about 13%. And now the last point to hit home on is just the sharp decline in VC valuations, at least based on the data here, for mid-stage and late-stage deals. We're seeing investors across the board be very, very selective on early-stage deals, and those valuations, interestingly, are up about 27% year over year. On the flip side, though, where folks are investing much more dollars, like on mid-stage and late-stage deals, and potentially being more cautious with those larger checks, mid-stage is down about 63% and late stage is down about 41%. So that's a wrap really for this month's Software and Internet Monthly Market Report. If you'd like to get added to our mailing list, don't hesitate to reach out through the website. Thank you.